Good evening, everybody. Welcome to the live Facebook of Martin Wong. I hope my sound is coming in okay, and thank you for coming. And tonight we definitely have a very special talk on our Wednesday night, which is quite different from our breakfast show. Thank you again. And if you could hear me well, just give me a thumbs up to ensure that now I'm coming you live and good. Thank you. And today I believe the topic that we are sharing with you tonight is at everybody's mind. It's what is really happening in this market. So let me give you the A to Z about the rubber glove update tonight. That's right. Now, of course, some of you who are member already know since the red pentagon, which has appeared for KLCI, and many of you who are using SMARTRobie would have known that avoiding this red pentagon is one way to avoid disaster. But I'm going to share with you how tonight you can make it up what you have lost on rubber glove. Would you like to do that? If yes, please give me a thumbs up in here, and also do share this video in your timeline. And don't forget, this coming Saturday at 2 p.m. we'll be doing our Trade VSA Masterclass course preview for those of you who wanted to know more about what we offer in our flagship educational program, plus the 12-month mentoring that we do. All right, do check out the Zoom session in here. More details will be available next. All right, so thank you for sharing. So welcome, good evening everybody. Welcome to another live Facebook, that's right, on the Martin TF Wong. And tonight coming with you after a little bit of research and really scanning out that market, what we have for you for the KLCI rubber glove sectors. Now for those of you who have the rubber glove sector, please type in rubber glove. If you still have some rubber glove or you got rid of it, do let me know. Just want to know how many of the audience in here still has this rubber glove at least. And also, if you're first time listening to us, please type 1, so let us know too, so we can really cater the content that we are providing in here. Absolutely free, lots of update just merely for you. All right, good. We still have some people have some rubber glove in there, and of course, it's always good to know what is ahead of you, whether this is something that you still want to keep or something you want to sell a bit more and so forth. I think that's why you are here for. And let me give it to you straight by looking at the facts, by looking at the chart, and also looking at the fundamental too. And most important, make an informed decision. I think many of you may have known that being an informed investor is important, that you don't want to parlay all your winnings or all your losses into one sector, which is the rubber glove in here. Of course, our tools, our Trade VSA plug-in tools with our combo package are still available, as we are in the way promoting our October intake here according to what we will share with you tonight too. All right, let's look at what we have. And of course, don't forget to subscribe to our YouTube channel, and all our video are archived in here. You can look back into the last time when I talked about the rubber glove resurgency of the third wave. That was only a little bit going back to as far back as about 6 months ago, I think, if you know, maybe a bit more than that. And I've talked about those pointed, but the first one we talked about it was maybe last year, towards the end of last year. So this is probably my third or fourth rubber glove update for those of you who have not. Of course, thank you for joining our best Telegram chat room for all free stock market, where you inform of our schedule of all our talk in here and not to miss out. And of course, rubber glove, hate it or not, or love it. Of course, those of you who have came in much earlier on rubber glove last year, when we talk about it sometime June, and got out maybe in October, you will felt that rubber glove did you well. However, for those of you who would have got in October last year 2020 and held on to now, then you will be saying, what the hell is going on, Martin? Why is rubber glove going down and down? And we have seen also later on, I'm going to show you top glove, what is really happening here. A little bit of also effect from the community of investment in there. Definitely, of course, we also have the big leader in here, Top Glove. Right now, you could see in this report going back in the bad news first came in July 2021. You could see Maybank say the best for rubber stock is over as the ASP. Now, many of you know what is the ASP, right? Just type it in there if you don't know what is ASP. We really appreciate just in here. ASP stands for average selling price. That is the one that many people talk about in here. And I will cover some of this information. You may or may not know about it, but at least put it up into perspective to be updated on the matter so far that we have. Now in July, we had this news came out, but people tend to ignore it and saying that the ASP, but when the result of Top Glove came out and was missed by 70%, which I'm going to show you where you can find all this information absolutely free, so you can make an informed decision, and also knowing about the knowledge is also important in here. So if you go back to this news article, so if you look back at Top Glove around the time frame where the news came out for the Maybank was somewhere in let's go back again. It was this date here, 2nd of July. So if you go on to the stock of course, this is the Pentagon guided chart that many of you have already. If you not have, you want to consider this, and this is where a tall tale sign about where going back to far back around $6 with Top Glove, broke through the ATR stop loss 4th of May. That's where you want to be out. Okay, that's where. And if you got out and remember, there wasn't really a good time to buy in, and there are many occasions in here you still need to cut loss, and here you still need to cut. The question is, where is the right entry in here? I think many of you would have looked at it, would have probably got out and not even look at this stock in here. Now if you combine the Pentagon, right, if you look in terms of what we call bottom fishing in here, the trade isn't there yet. No doubt we are seeing climatic volume in here, but having said that, let's look back to the news that we saw, which is the 2nd of July in here. The market did turn a green Pentagon, but there was no demand, and then the market broke through in here, then finally broke through another straw, $3.50. If you look in terms of all scheme, if you're able to escape cut loss, okay, now how many of you cannot cut loss? Now, if you cannot cut loss, that's where your portfolio will be down 46% in here. Okay, it's very important that at this time, as we talk about, the KLCI is still going through very negative. So make and at least ensure you have a right product that you see here will keep you into play. Right now, you can see, having said that news, we have two rally. That was, in my opinion, could be a possibility for the smart money to go out, because the earnings that came out in here, which I'm going to show you right on the Top Glove, this is unlike many of the charts that you have here. Here you could definitely see Top Glove has, one being the market leader, has a surprise of missing almost 70%, and it was supposed to be estimated 29 cents, but reported only 7 cents, and when you miss it, that's why the market broke through. But of course, the smart money knew that a few days ago when it started to break down in here. Okay, so that is what's happening on the chart wise, but let's go through what really happens in here. Now if you go through that, immediately after the news that came out on Top Glove, where the earning dropped almost and missed out by 70%, many of the best stockbroking firm, really saying, look, this is like a snake, cobra. What do you do when you see a cobra? Isn't it a cobra frightening, right? Yes. If it's frightening, avoid, stay away, right? So that's what many of the recommendation are saying. Sell Maybank. Maybank says sell Top Glove. KF sell Top Glove. TA Security sell Top Glove. Hong Leong hold. JF hold. UOB Kay Hiang will be a hold. Neutral, right? Only one company, Kenangan Research, are saying outperform with a target price of $3.60. And if you look back to where Top Glove is right now, bring back this chart here, so it's important. It is 2 ringgit and 80 cents. Okay, 2 ringgit and 80 cents right now in here. So that is what it is. So when you see a snake, you want to avoid, right? That's right. That's what's happening in here. So if you go back to very classic move, when we see a lot of extreme bad news, right, it is a time to think to buy, but don't buy yet. Why we need to be careful? Because there is still this cobra snake out there which can go lower and lower, isn't it, right? So we want to make sure at extreme bad news, it's always time to buy. From a VSA standpoint in here, we are seeing climatic in here, but let me just give you the facts first before you do decide on that one in here. Now, let's taking back to pre-COVID in 2017, the rubber glove Malaysia was being one of the largest in terms of global market share in here, about 58%, 60% in here. Then into early December 2019, we have the COVID, and then immediately Malaysia ramping up its production that we've seen Kosan, Hatalega and Supermax perform very, very well, and that's where many of you will lure into that comfort that's saying that this market is going to really push up, and as such, they've invested a lot of money in here, and the Malaysia global market share really shot up, and that was where everyone was really, really happy, making money, happy last year, isn't it? But this year it has changed a lot right now, and let me just get this here. So we have moved from a 57% to a 66% in here. But all in all, if you look back to the rubber glove export, right, where we were in 2017, let's switch to a laser pointer in here. You could see this is where we were, 2017. Optimistically, the rubber glove has always been growing in a linear, okay, a linear which is about looking at 7 to 9%, the kind of growth in here. But you have seen since the COVID-19, again at the same time, many of the analysts also projected very optimistic figures about how high a rubber glove can go. But if you look on hindsight, rubber glove shot up from June in less than a span of 9 months, and then tumble, and even worse off than right now before the COVID-19. So many of you are really thinking, how can the stock price be worse off than before the pre-COVID, right? Now we still have the COVID, we are still in COVID, cases are still a lot more out there, but what has really change in here? Now I'm going to go through in here and share with you. So immediately after the COVID-19, you could see the actual report, which usually follow this red line here, which is the projected export flow. Of course, the actual flow will be this linear growth in here. So what has taken is a lot of people were projecting very, very optimistic because businesses were very, very bad in 2019 and 20. Many businesses couldn't do well. Property sector was not doing that well, and with the COVID, travel was not doing well. You can see many companies, whether it's public listed or even the ACE market, has gone into the glove making or healthcare, and this is partly because of the actual figure that Malaysia hit was about 36 billion. Now, typically, if you look back in 2018, we were always below 20 or to 25 billion export. But this tremendous growth that we've seen, at least by 20 to 30, that is almost a 50% growth, and nothing grew that fast. So every businessman, guess what? They all became greedy because they couldn't do so well. So in such that we have seen a lot of the new glove venture in here. This is where a lot of people, especially last year when it comes to September, they have a lot of options. They can say, hey, I can buy 80, I can buy Green Ocean, I can buy Visiona, and so forth. And the list even got more. All right, even Ace account in here, Kanga, Notion VTech, Marsing, which is a property, Saucon, wastewater property development, Enix, IT, almost everybody got into it. Yes, no doubt, on shorter terms, if you had gone in early and got out, treating like a trade, then you would have made money. But again, most important, I asked the audience in here, especially the public in here, what was your strategy in there? Now, if you don't have a strategy, then it's just merely up to the news. And most time, would you believe that you will end up losing money? That's right. Now, believe me, that's why it's important to have the right knowledge. We will talk about it later here. So you can see, so what has happened? So what really happened, right? The snake, right, became worse, and it became a snake pit. Okay, so for a lot of the rubber glove maker, right, the ugly side is that no doubt there was this lure of finding hidden jewel, but the snake pit was actually for company to die in. Really, why do we do that? The rubber glove right now, not many people know. If you're in rubber glove, you are going to be in that snake pit. How many of you agreed and share with me? If you do, just type in the snake in here. Because why? If you look at rubber glove, first of all, it's capital intensive. You need to invest a lot of money. Now, if you go back to the previous slide, how much kind of money that you are talking about in here? You can see, let's look at the AT systemization. Now, AT systemization is doing automation and machinery. You can see up here, right? They announced in August 2020, which assumed they take about 6 months. So 6 months, which is only this year starting production, then probably they have to invest 150 million. So that's capital intensive. Again, also with the COVID-19, they also have to hire worker, right? We know worker in labor, kind of labor intensive. We hear about the COVID-19 cases, which is a lot in Selangor, especially in the Klang area, Jalan Meru. That's where Hatta Lega and Top Gloves are. And there were a lot of this so-called migrant workers or not migrant workers, we badly treated. You heard those kind of news. So again, labor intensive and capital intensive. Even the smallest amount in here, we talk about, right, was 40 million Carex. Now remember, Carex make condom. Just 2 line itself. So 1 line is already 20 million. And this one in here, single line 19 double formal dripping. So they're talking about 20 lines, so 150. So 1 line, you're talking about maybe 20 million you want to put in there. How much that kind of money you're going to make? Let me share with you right in here. So it really has become a snake pit, as I said before, for this company to die. So that's why a lot of the stocks you see today, right, are really snake pit stocks. So some of the stocks that you have, if they are just making very thin margin, like 7 to 8%, they are likely to die. Why? I'm going to go on to this now. Next is because number 3, think of it, is the flattening demand that we have in here. Right now, we are only considering the Malaysian side. We have not considered also the China and also the Thailand glove maker in here. So with that coming in, a lot of the production line, we are seeing many of those what we call unmet demand are being met right at the end of 2022. So we're seeing a flattening demand. You may start to think, hey, the COVID-19 is still ongoing, but very important is because there are so many of what we call eventual surplus. There are lots of supply coming in here. There is going to be a price war. So when the price war comes, what does happen? Just like what Maybank said, the average selling price will come down because everybody is going to wait. Oh, since there's a price war, just think of it. If you have a TV, you want to buy that OLED, a 75-inch TV. Previously, you look at it, was about 15,000 ringgit. But you see every month is dropping by 1,000, right? You say that, hey, it's 15,000, I must wait until drop to about $3,000, then I will buy lah. So a lot of the hospital now with the vaccine rollout, many of them are thinking about that. So that's why important. Now also another report was a big jammer that also agreed with why a lot of the analysts in town going from Kenangan, going from Maybank, going from UOB is because of the Frost and Sullivan rubber glove demand that came out on May 2021. So this report came out in 21, but it didn't really absorb and people didn't really pay attention, right? Until Top Glove came out with their earnings and they missed. Remember, they were supposed to hit something like 24 cents earnings per share, but instead they only hit 7 cents. They missed by 70%. So what does that mean? If you think very carefully, it simply means that, look, previously all this kind of economic report, demand report, don't pay so much attention because accuracy is out. But finally, what they say here is quite true. If you look from here, the ASP, average selling price, which is used to be US dollar 69 cents, again, depending who you look at, right, has dropped, right, to 44 US dollar in here, right? 44 to 30 over. And also you're looking at the US billion pieces in terms of sales volume, the average growth that will significantly drive down. No doubt before the COVID-19 we were here, right? The question is, there's so much of the demand been met by a lot of the manufacturers in here. Now remember, China used to be producing less than 20 billion pieces. They are already up to 200 billion pieces inside there. So remember, every company is ramping up in here, but demand has flattened, ASP, average selling price, has flattened. And the same report from the Frost and Sullivan also talk about the Malaysian export revenue, which tend to flatten. Now this is a very conservative report. No doubt the export value are higher, but you can see in here the export value as a percentage of the global continue to fall because of the China. The China information here is not available from the Frost and Sullivan report in here from 20 to 25. This is the demand versus the supply. Now if you take note, in 2019 when COVID came, and 2020, this is where we are. We have still this demand almost 120% not met, because if we see, we need almost 718 billion per year in here. So right now everyone is only doing about 320 to 330 million. So that's this 120 million. But right now the vaccination, despite going for third booster, right, there is still demand, no doubt about it, but people are waiting for see, because this Frost and Sullivan report also give to another report that you see here, which is by vital factor analysis in here by local company, saying that very likely, on the next slide you will see, by 2023 we do have a lot of output. You can see the yellow line here was the output which is actually made, and also don't forget, you can see the number of demand started to taper off to around 500 million. This is where the economic of scale, right, of producing rubber glove does not work anymore. The more that you produce, but unfortunately demands are dropping. Now of course, some of you may have that question, what will make rubber glove go back to the same era like what we saw last year, right? If we have another COVID, will be COVID-21. Of course, we don't want that, isn't it, right? No doubt, if we have another COVID called COVID-21, very likely all your rubber glove stock is going to go back to the previous level in here, and maybe at that time you may want to exit a little bit, but it is very unlikely because of this COVID-19. We are still in the middle of it. Maybe in the next 5 or 6 years we may see another one, but of course, after having gone through this COVID we see so far the last 2 years, I don't think we want another COVID 2021. But right now you could see the global supply of the rubber glove can be met, but the demands are coming down very quickly. So on this next chart is also important, where we see the greatest growth was from 2020 to 2021, where we see the market size growth. Of course, a lot of these things is already been priced in. That's why the stock price ran much higher right now, and right now the market is coming down. Now what we hope for is this report, alright, Frost and Sullivan was overwritten, and coming on this just 2 days ago, Comfort Glove also came out with a very positive report saying they are doing well because of the ASP. Again, we want to see that tumbling of what we call narrowing of the margins, which I'm going to show you right now. Now in trading view, okay, now this is how we see, right? Now if you have trading view in front of you in here, make sure you log in and get in, and over here you could see the 3 bar here. Can you see this 3 bar in here? Now this is definitely one of the combo package. Those of you who are subscribing and you want to subscribe to it, just click onto here, and when you see finance, all right, follow me together, right? So let me just show you. When you see Top Glove, click on this one and go over to finance in here, and this is what I want to show you was this few things in here, very important, that talks about the fundamental platform. This is where you can really check them out. Now remember, it has the earnings. The gray one is the actual, okay, and the red one are the surprise. So of course, red not good surprise lah. You see, the last time when we were here, the 4th quarter. Now that's why TradingView is so up to date, with all the analysis, and this was only 3 days ago, so it's updated. You could see the estimated was 29 cents. They're estimating 29 cents earnings per share for Top Glove, but it came out to be 7 cents, and they miss out by almost 22 cents. That's a 74% drop, and you could see the difference, and that's why the Top Glove felt so much. So right now they're estimating 4 cents in December. Okay, which means right now we are in October, let's say now October, 2 more months, 21st of December. So on the chart wise, we are seeing right now climatic volume, which means the next 2 months will be very interesting to watch the volume. Now, because right now they are only estimating 4 cents, from 7 cents to 4 cents. But if they're able to sell more, assuming they're able to control the average selling price, but no doubt, if you look at Top Glove, the US border and custom already reversed, which means now they can sell back. Who knows, with a better surprise than if this goes down to about, let's say, right now they're only talking about 0.04 cents, 0.04 cents, and should they able to hit back maybe, let's look at it, 16 cents, then you'll see a lot of the rubber stock glove. But very important now why the stock price is dropping. Now we see this annual in here. Click on quarterly, so make sure you click on and make sure you log into TradingView here. Now those of you who have TradingView in here, do check it out and type it in there. Now very important, I want to show you here is earlier on you could see annual, you could see the margin, right? So that's why we saw that huge price, right, from 7, and usually rubber gloves are only less than 10%, which I will talk about, the 7%, then it went up to 24%. So when you see what I talk about margin expansion, again, I cover this on the fundamental investing in here, where you saw that 24% margin expansion and then it went up to 47. That's where the takeoff is. But this is only on a yearly basis. But if you look at quarterly basis, now you can see the tapering off. So whenever there's a big slide, and this time it slide from 48% to 28%. That's what explains the huge drop that we have on the 17 in here. And I do think Top Glove, what they're trying to do is try to do what we call a big buff financial, which means they know the report is going to be bad. They make sure they throw everything right now, like the whole kitchen sink. So going forward for the first quarter of 2022, I do think it could be around 14 cents way back here. Then the stock market will rally in here. It could be also, if you look in terms of a chart, let's take it out in here. You can see switching to a weekly chart. So that's why it's important here to really wait for the green pentagon now. That's why having a package like you will be accommodating, because you can switch between daily chart and weekly chart, and you can see also the green pentagon in here, right? So right now we want to wait for the green pentagon on the weekly basis. If you want to take any position in here, or at least switch back to a daily, we are seeing climatic volume in here. So like in any bottom fishing trades, right, we know two things right now about Top Glove. First, the earnings which is coming out on the 21st of December, would it be good or not? Because why? Top Glove is the market leader in all the rubber glove sector. If it do fall or if it do go up, all the remaining sector will follow soon. So that's another tip for you too. All right, so take note of that one. So that's on the so let's take a look at the rubber glove review with the TradingView platform. Of course, what I've shown in here just now was all the Top Glove in here. You can also look at Hata, right? Very similarly, Hata Lega, click on that one and you can see again red pentagon breaking a ATR stop loss. You should get rid of this stock already, right? I have to give you a very good reason why you should not hold on to it. And then again, you can see the actual was 66 cents, came out to be 33 cents, estimated 3 cents, so was in line. The first quarter will be coming out for the 2021, so we want to see the Hata Lega when is the next. You can see here November 9 is the next release in here. So that's this was on the 3rd of August. It hit 66 cents. There were no estimate in here. But again, what was really troubling again was the falling profit margin. But if you look at it, you can see a real difference in here. No doubt, Top Glove fall, Hata Lega also fall. But guess what? Look at the margin expansion in here. On the quarterly basis, do you see the same trend with Top Glove compared to Hata? What does it mean? It means Hata Lega is managing their glove making skill much better than Top Glove. So very quickly in here, you can see that margin expansion already tell you something about in here. And dividend yield, no doubt, based on the price right now, they're giving about 8% dividend yield in here. So take note of it. So on the very short terms, in terms of margin handling or margin expansion, Hata Lega seems to be doing better than Top Glove. Again, you can actually check this out. Of course, there's the other two players in here, which is the Thailand, and in Singapore we have AP4. UG Healthcare is also both a Malaysian company, but they are listed in Singapore. We have Sri Trang, which is listed in Thailand, and then from the Chinese player Blue Sail and Inco. these are the two rubber glove maker which are listed in the Shenzhen. And again, through TradingView, you can actually look at this again. So just type in blue sale, just do the same thing as I do, right? And you can see blue sale medical in here. Again, not falling as bad as what we saw on the Malaysian one in here. But I'm going to share with you a very interesting characteristic about the rubber glove, which is the next slide that I have. All right. So if you look at this, do you see a stock comparison in here? Now, number one, we have the Malaysian rubber glove maker here. Number two, we have the Chinese maker. Okay. Number three, we have the SGX and Thai glove. Can you see any characteristic? Type inside there. All right, if you can type inside there, what kind of characteristic can you see on this one here? For compare the Malaysian rubber glove maker versus the Chinese versus the Thai in here. Now take note, this is okay. Now I'm going to show you again. This is all in TradingView how I got this. Okay, and let me just. All right, so what I'm going to do is just going to bring up this chart. So once you have TradingView, it's very, very easy. You can see this is the chart that I have. Okay, and I built it. I'm going to show you how to do it, but not in today's session. Definitely in one of our paid session in here. So let me just blow this up a bit here and extend this. Okay, now I got to switch it back to here. All right, so this is going back to January 18, right? So you can see from this example that you see here, okay, what can you see, ladies and gentlemen? Let me just pull this a bit more. Okay, I don't want so much. So definitely you can see, let me just pull this down a bit more, right? You can see actually, right, the Malaysian rubber glove actually went through a much worse sell-off. Let me just rearrange this back here again, right? You can see top glove, Hatta and Kosan, that's right. On this chart, on this side here, you can see they were falling almost down 60% from what date was from the 1st of January in here. Then Inco, which is the Chinese, listed in Shenzhen. AP4, which is the Riverstone, and then Blue Sail, and then finally STG is Sri Trunk. So you look at Sri Trunk only dropped maybe around the 20% mark from the beginning of the year. Of course, at the same time, AP4 also went up 80% in January and then fall back out. But if you notice, the Malaysian stock were much worse off, right? Why is that? Think very carefully, why was that? I think the answer was pretty it's because also the issue of ESG. ESG is the environment, safety and corporate governance, where top glove again fail to satisfy. There's also some issue with Hatta in there, and also one of the things that really explain is because of the lack trust of foreign funds coming into Malaysia. Right now our foreign funds in Malaysia are very, very slow. How do we know the foreign funds are coming in or not? Again, this is where you can use our plugin in here. As you can see, just switching it to where we are, and go over to KLSE. You log in. Once you get a login of our account, just go over to the foreign fund flows, and then you could see the foreign funds flows really flows out. You can see there was a huge selling that we have on the 20th, which is 121, but yesterday 21st, the green are back. The foreign funds are still here. So as long as we continue to maintain this, which means we do probably have a support at 1520. It's not going to get out. So that also tells me if the rubber glove will see some sort of recovery, the foreign funds is going to be buying, and definitely this is one way to hint to see this market is still here or not. All right, so that is what we want to talk about, and later I'm going to show you how to build these charts in here, where you can see matching the fundamental metrics to the stock price. Not only we are able to put in the technical analysis, just like the volume spread analysis, but we are able to match the fundamental to the price. Then you can see some of the reason behind here. So don't go away. We're going to be coming back shortly also in here. So right now the market has oversold, as you can see before, with Hatta and Togler. That's making this situation oversold. But you know, right, things that usually oversold can rebound back. So don't give up yet if you have not. But having said that, if you do get a rebound, you might want to exit again. Now, in our TradingView fundamental platform, as part of our combo and masterclass education, I'm going to share with you how you can input the modern value investing metrics. Now, one of the reasons why I talk about this is because I want to show you how you can put price versus ROE, a price versus net profit margin, price versus free cash flows, and price versus return on investment return on invested capital, because these are the things that I'll be teaching on Saturday as part of the training for the combo package. Now, for those of you who want to sign up for our value investing metrics, this is something we want to share with you. At the same time, I want to show you how you can do this as a demo. So first of all, you will have a screen like this. As in TradingView, you will probably get this plus our trading view in here. So what you want to do is finally add the financial indicators. Now, very quickly, you can already see here, right? Why is the return on equity going up to 160%, but you can see stock prices coming lower? It doesn't make sense, right? At the same time, if you switch over to net profit margin, you could see the ASP, which in term effect, you can see, right, the tapering of the net margin. So you can see it was at 53, 46, and then 28. Now, for the same stock, if you put on to Hata, all right, now how many of you have Hata? Now, if you have Hata, type inside there. Now, if you look at Hata, it's a different situation, isn't it? Top Glove is tapering off. At the same time, they are assuming this coming November, Hata will also tape off. But let's say, Top Glove rebounded back with another 15 cent EPS, and Hata did not taper off and maintain, then you'll see Hata Lega will rebound much faster. That's also on the fundamental side. So that, if in my opinion, if you're holding Hata Lega, maybe you shouldn't get rid of it. But if you look very deeply, in terms of, now once you turn that, you can see all will switch by itself, right? Return on invested capital, you can see this is about 100%. But in price over free cash flow, that simply tells you the higher the number, not so good lah. You want to have a number as low as possible in here. So right here, if you switch back to Top Glove, okay, right, you can see Top Glove, right now the free cash flows are still in the negative territory, which means that actually cash flows are really flowing out in here, but the return on investing capitals are still maintaining high. So through this deduction of using modern value investing, you could see one of the reasons prevailing why you should hold on to the stock and why you should not hold on. So make sure you have this in all your fundamental charts. This is only available in TradingView. Unlike any other competitor in there, they don't have this. And I'll be teaching this on this coming Saturday. So for those of you who are interested to learn, so make sure you join us on this coming October intake. And there's a number on the right hand side. You can find out more information to join our masterclass, and then I will invite you to our regular monthly training in here. So knowing this, now we just showed one. Of course, you can use it for Sunjun, you can put it for Bluehost, or you can even apply to Apple stocks, Tesla stocks, and that's where you can really reinforce for those of you who are fundamentals and those of you technical. For your information, the masterclass that we are talking about, we combine both fundamental and technical analysis. One of the few educational provider that does that. Either they are more centric towards technical or they're more centric towards fundamental. Now we both find that using both FA and TA give the best of both worlds in here. So that's something food for thought, all right, for you. Now, of course, there's also another one which I don't have time, is to share with you how, and I will give this, this will be on this coming Saturday. I will share with you also how, let me just bring this up here. Okay, how I'm going to share with you is the fundamental modern value investing on cash flows. Here I have a US and I have a Malaysia, so you can actually filter out all those. Let me just save this, right? So there's actually a fundamental scanner in TradingView too. I will teach you how to use that one. So for example, these are what are so-called very good fundamental stocks, and you can look at this stock, click on this one here, right? Let me just switch back to here again, right? You can see R exit actually, right? Now you're going to switch on to your green pentagon, Let me just pull this up down a bit more. Okay, and right, you can see green pentagon already turned right on the 6th of August. These are company that has good fundamental. Now, why I bring this up is important is that my job in a way is to convince you if your money eventually on the rubber glove are not making money. My question to you is, where's your alternative? Where can you diversify out? Because right now, to be frank with you, rubber glove don't have any entry. And one of those reasons why is because if you turn on to your top glove or your Hatha Lega, again, you need to look at the green pentagon. All right. Of course, some of you have SMARTRobie. It's also good. You can use SMARTRobie in here. But the fact that in TradingView, you can switch on to a daily chart, you can switch on to a minute chart, and you also can switch on to the hourly chart. That gives you a kind of details that you will not see being a SMARTRobie user. So definitely one of the benefits that you see here. So let me switch back. So of course, you want to wait for the daily chart. In this case, for SMARTRobie to come back out, that is where you want to take some sort of position, else it's continued likely to go further down. All right. So the fundamentals on the modern value investing metrics, again, part of our combo package that we teach in our Monday session in here, I will share with you on this coming Saturday. So make sure you join me then. All right. So right now, what we have said in here, another question that I always get is, why is rubber glove PE so low? All right. Now, the reality about PE, if you look at it, is that the net profit margin, as I said before, those two companies very quickly, if you look at it, between Hatha Lega and Top Glove, you got to look at the net profit margin, okay? Now, some of you did ask me about Kosan for this time, because due to the shortage of time, I know you have Care Plus, I know you have AT system. We just want to compare two market leaders. The same thing you want to do is perhaps subscribe to our package in here, join our program in here, and then we can even talk more about it. Of course, this is where we are able to spend more time with you in here. I think that's really one of the big benefits, and some of you are already may want to inquire about this. Now, if you look from here, why rubber glove PE is so low, it's because if you look back before the pandemic, about 12%, but during the pandemic peak, the net profit margin, which I showed you just earlier on, how do we know? Very simple, isn't it? To confirm here, right? Or you can do your research. There, here you go. This is where you know the peak, right? The profit margin in here, Hatha Lega was what, 57%. That is the peak. All right. So the question is, when they peak, it will taper off. And the question is, where do they taper off? So right now, even though it's peak, but the price already taper off, which means news already priced in the bad news. So right now, if you have it, don't average down, don't chase after that. But more important, have a fresh mind how to do this differently now. Acknowledge that you make a mistake on your rubber glove. The question is, what would you do to correct it? Definitely, knowledge is important to have this. All right. So this is something that I want to share with you in here. All right. So now, what's in store for rubber glove round? These are the three main reasons, right? In short, just to sum up what the things I want to talk about in here. Definitely one of them is the falling ASP, right? At peak, depending which report you look at, the 1,000 pieces, okay, 1,000 pieces of rubber glove was selling at $134, right? Right now, it's about 65 to 67 US dollar. This is per the conference from Hatha Lega in the recent announcement of the report in here. But it would normalize into 2022, 2023 to $35 and $45 in here. That's where it's going down. So you can see from 65 going to 75, which means margin will be half because average selling price will be half. But if you look back to pre-COVID, just before COVID, was only doing 20 to 25. It is still considered high. So no doubt, sometimes I do think that a lot of the cases, in this case, Hatha Lega oversold compared to Top Glove, right? Due to the margin in here. And another reason that you can see very well is because there is a lot more competition in here. Lots of barrier entry. We have seen some of the smaller company like in the property or IT company, just like anything that they cannot make money, they'll go into rubber glove. And remember, but the problem with rubber glove, you rely on capex and you rely on economic of scale, which I've talked about in here. If you don't have that, then it becomes a snake pit, All right, a snake pit. There's a lot of companies now. Also take note, China is becoming more dominant. They are really beefing up their lines inside here. Itcon and Blue Sail, they have increased their market share to 23% from 16%. As such, that takes down to the number 3, the buying power. Because of the buying power that the COVID cases seems to taper off in here, many of the consumer, the hospitals, the clinics, the healthcare practitioner, they are adopting a wait and see attitude. And also the COVID Delta versus the vaccine rollout. We have seen also vaccine rollout actually uses more and more rubber glove in here. Of course, that also takes back finally to more surplus, right, than demand. As I said before, in the Frost and Sullivan, used to be about 120% of the demand not met, but in 2023 and 2024, all this demand will be met and there is a lot of surplus. So what does that mean? Okay, now if it means this 3 things, so should you invest your money now in rubber glove maker? Now if you look at the top 3 that we have, although two attention was pointed up to Hatalega and Top Glove, if you look here, the average net profit pre-pandemic, Supermax, Hatalega and Top Glove, who has the highest? This one. Average net profit margin, who has the highest? Also Hatalega. ROE, who has the highest? Also Hatalega. ROE during pandemic, who is the highest? Supermax. All right, in terms of future glove production, also important. If you have a lot more, make sure you're able to sell. If not, then you have to put it into a storeroom, just like what we've seen right now in the oil and sector, where the demands for the petroleums are less, so they store it at the tank. So again, I do think my best pick right now, if I want to invest, is Hatalega. But again, I only be thinking. I still have to wait for the blue trend zone or the green. So which take us to the next thing in here. Now I'm going to share with you what are the better shares to look at, and this is part of our combo package and our 3-day masterclass, which we'll be doing next week 6 to 9. We are showcasing you one of our latest KLSE sector index. You can actually use it right now for our members here. Let me just bring it up for you. Okay, this is the one. Now if you look at the latest KLSE screener here, and how to access. So of course, let's show you how I log in first. Now first thing you want to do, you go to tradevsa.com/m, and once you get join our program in here, you'll get a subscription of this. So once you log in, right, and there are screener training, we won't have time to go through this. So the first thing you want to go through is looking at the screener, and these are our KLSE sector. There are many of this using different strategy, okay, different strategy. But tonight I'm just going to talk to you where are the types of sectors you can. So right now we can see in here you have technology, which is only showing the green pentagon. Okay, the remaining of the sectors, whether it's KLCI, KL Utilities, Transportation, Telco, REITs, Property, Plantation, Industrial Product, they are all showing red pentagon. Now, if you want to get hold of this very good screener in here, all you got to do is call our 010-266-9761 if you're interested to share it. And also, one of the things very good you can see here, percentage from the pentagon in here. Now, you can also click on the technology in here, and very quickly, first time you will see this sector pentagon chart, which is not available on the trading view. You can see here, if you go over to technology, Bursa, right, because they don't have volume, so you can't see when is, you can see the differentiation, right, in here. There's no volume on this chart, but we have volume for this chart in here. All right, so that is where you see the differentiation between the two charts. In here you see the green pentagon and you don't see the green, and also the this one is delay and this one is on time, which means tonight. So right now you could see we have the green pentagon really on sometime in 5th of September. That was about 15 days ago, right? And here is where the important part is. So things that you want to be beginning to look at are those that is on the ST. Okay, so right now you can sort this. You want to be on not too high, so the up and coming will, if you look at it, will be actually, in my opinion, green will be finance. But take note of it, finance already just turned red pentagon in here. So right now what is really hot is the technology sectors inside here. So once you have these technology sectors in here, of course, if you knew when it first turned green pentagon way back in 4th of July, that is the part, very simple, right? Once it turned green pentagon, what you want to do is next, you go over to the screener and you go over to the KLSE sector gain. Now the KLSE sector gain gives you a list of all the stocks, right, that is fundamentally sorted by the industries. Okay, so in here you just go over to technology in here, right, and look at it. Yes, that's how simple is it. Of course, this is how we want to teach you all to do a sector rotation, so that's correct. And also at the same time, when you can also check out when will be green healthcare. If you look at healthcare, the sectors, where is healthcare? Okay, healthcare, there you go. Healthcare is the worst. You can see here, minus 8% from the red pentagon in here. So let's click on this one here. All right. And you can see, right, if you have avoided here, you can see the healthcare sectors turn actually somewhere all the month in May, turn green, and then finally last green, and now break down again. So here's a clue, ladies and gentlemen. And just imagine you have this KLSE sector. You just wait for the sector to turn green pentagon first. And the way to look at it, you can see 3 months, or you can see 6 months, or you even can see year to date. The market has broke down a lot more. So right now from the red pentagon, it's about 13 days. Now, if you look back, the last longer time that frame we have was 1 month, 2 months, 3 months. It's almost 3.5 months. So like I said before, a good clue will be the 21st of December, which is Top Glove will be doing reporting then. So during that time, which is about another 3 months or so from here, man, we might see another turning during that time, that turn. But right now, the best time to be in is what? The technology stock. So we already switch over to the technology stocks here. Let me just grab here. Yeah. So we are right now at the technology. Again, you want to sort out here and sort out the ST. So always look for green. Okay, so you can see this one is fine. If the trend zone is red, there's no problem. This is just talking about heat zone. But what we are looking for is green in here. So you can see AMLEX, this one inside here, right? Or you can look at UWC. So we have UWC. So then we go over to Trading View. Okay, Trading View here, we look at UWC. All right. So Trading View. Yeah. So Trading View with UWC. Okay, there you go. But no doubt this sector, this is, to me, it hasn't gone up a lot more yet. If you look at some of the other stocks like D&O, okay, now D&O already lari already, okay. So you can see UWC, because of the green makes it very easy to choose, right? It hasn't run yet. So that's one of the stocks you want to. Penta hasn't run yet, green. Now those have already run, you can see ST and LT, which is purple. You don't want to pick them. They already fly already. Okay, like Genentech already fly already. Okay, Turia already fly. Franken already fly. MNS fly already. Okay, the purple one, Suma Sudah Terbang. Vitrox already terbang. So you want to pick those hasn't fly yet, and the only way to do is through our KLSE screen. Now, how many of you would like to have a screener like that? Now, just type 2 if you like to have a screener like that available to you all the time, where you can check through and correspond to the KLSE screener, like what I've said before. First, you want to look at the sector, okay, the KLSE Telecom in here. Again, you just sort out first, turn this off again. You want to sort out based on, the best one will be green, finance, transport is coming back in here. So you can see, let's look at transport. Transport again, just turned red pentagon. Just imagine it actually, when it first came out on 15th of August, it turned green. That would be great. Of course, you can also look at the KLCI. This is the KLCI in here. And you can see we just broke down only. We just came from a green pentagon to a red pentagon. So we have to wait. Now, on hindsight, if you look at this, the only sector that hasn't broke down yet, if you look at technology almost want to break down, but it did hold on the 21st of September with a positive. And I think today, many of the technology stocks are going up. in here. So this is definitely one sector which will really help you a lot more in here. Of course, we also have another which we will release to you. Let me just bring, is the KLSE sector chart in here, which very similar to what you saw, but what it does is actually showing you how many days, 15 days, and you can see number of percentage here, about 1%, and you can look at healthcare about 8%. So very quickly on your eye, you could see red, green, 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 right, which are the sector that is red right now in here. So this will accommodate as part of your dashboard so you can make the right decision. So no more excuses, right, to have the right information at the right time. Again, this is something that we as trader, built for investor like you in here. Okay. So this is something that you want to consider using the so right now there's nothing much except we spot on UWC very quickly. Of course, this list, let's look for another one in the list that we have here, which is green. You can see REIX. Okay, REIX is pretty good. Is this green also? REIX, REIX. Now REIX, just now we also check it, and if you go over to the trading view fundamental indicator, this REIX, it's very, very good fundamental. And how we know that? Just type here and go back to my here, just type REIX, right? REIX. Okay, and what are the things do they do? Again, you can go on to the 3-star here, click on that one, see the symbol info, click that one, and you can see they are in technology services. Okay, they just turned green pentagon here. Of course, if you can go in 4th of August, all right, 4th of August will correspond also to the sector. So right now in here, let's look at the fundamentals. Now let's assume this one is not too bad. You don't want UWC, which is a very popular one. You can look at this finance. Let's take a look. It pays a 4% dividend, a PE of 16, which is not too bad. Earnings of 6 cents in here. And again, let's pay attention to a little bit of our, there's no forecast here, but let's take a look at the quarterly. You can see quarterly, the margin. Check this out, ladies and gentlemen. You can see that the margin expansion, 36 to 43. So every time when we see a margin expansion, these stocks will move. And guess what? It pays a 4% dividend. So this is already a very, very good company in here. Of course, there are other statistics you can check on in here. PE is 14 times, and this weekend we'll talk about price on cash flows, also very good, which is a 9. Price on book is 3. Our return on asset 20%. Return on equity 23%. ROE, there you go, you found a good stocks. So we have picked UWC. Of course, UWC, it's very, very popular, but REIX, it's one of those shares which is also giving you another one, right? Gross profit, look at the gross margin here. And of course, you can look at the net margin. Look, check this out, net margin, 40, 36, 43%. They are maintaining and current ratios. Okay, let's see whether they have debts or not, okay, by looking at the balance sheet in here. Do they have liability? Non-stop, yeah, look at that, 45,000 only, so zero debt, okay, zero debt. What about cash flows? Okay, do they generate cash flows here? All right, and let's push this up a bit. You see, cash flows, wow, check at this out, 4 million cash flows inside there. So they are really, really doing well. Very quickly, this is something that you can check. So not only waiting for the green pentagon to come out, but you can actually look at some of the sectors that already move. But the whole point, we want to make sure where we find green, the numbers are smaller. Make sure the numbers in here are less than 10% in here. What are the MLEX? We have another one. Then you can sort by also the price. This is a full list that you get in here. All right, the full list. Of course, you can look for growth. Again, this is another special which we talk about in our investing course in here, looking for growth shares. So you click on that one, and that would narrow down to all those that is growth. Inari is a growth share. REIX again is a growth share, because growth share, we have a definition which is actually growing at least 10% on this EPS or growing on this revenue in here. So that seems to be on the right. MYEG, you can also take a look at that one too. Pentamaster, Unisem, okay, Excel Force, these haven't run yet. Of course, you can also sort this out. All right, just click on those to find your entry. All in all, so through this way, by checking the fundamentals and the technical, you itself already know what kind of stock to use. So no more listening to rumors. No more listening to the insider when to buy. But if you're going to be listening for stock tips, so make sure you get in, go for 5 or 6% as your profit target. Don't be greedy and cut loss. If you cannot do that, better don't trade. Then you want to look for a better stocks which have maybe like Rexit. If you don't cut loss, at least you still get a 4%. And if the market were to go a bit higher, right, then you will stand to gain, right? So this is how we at Trade VSA look for that kind of stocks to confirm both fundamental and technicals to ensure that we always arrive at the right place. Okay, so that is a very quick sharing that we do in our 3-day masterclass, just using purely the tools. There's a lot more that we are doing in here. We also be doing futures. We also be doing US market. Again, same tools that you use. So one time that you learned, whether it's for Malaysia, and then I will also give you my personal strategy, how I invest the 60 million portfolio that I have, so you can also do very, very similar too. I think all in all, my goal is for you to hit that $1 million portfolio, which I'm really going for all the masterclass students. So the KLSE index, the chart that you see here, will be available in our dashboard on the coming October 2021. It's part of the combo package. Now, if you're interested, just check it out in here. Of course, there are other sectors too. We have the screener, which I will talk about it for another session in here. All right. So all in all, you have the Pentagon guided watch list. We have other watch lists too. We also have the RHB jewelries. We have the Coal Eye, which I covered it earlier on last week, and we'll cover another session here. So we have plenty of interesting topic to keep you interested, right? When people talk about it, whether it is a Coal Eye strategy, which is another very famous investor, which is worth about 94 million. Fang Siling, okay, he has his strategy in here, but some people may find his strategy a bit outdated. You might want to use a technology, so something for you to explore. All right, something for you to explore. Lots of good education in here, and our Trade VSA Pro package with our proprietary information, which we share with you, the one with the KLC sector screener, will help you find more and gain more. Okay, so we have the UMNO list also for those of you who wanted to trade UMNO. We have the price map, big winners, small losses, lots of benefit in here. Okay, and in summary, what we're trying to do in here is to create a wealth building vehicle for you right now. So what we understand is that the more knowledge that you have, you can start off with a smaller capital. Very important. However, if you don't have knowledge, then you need a bigger capital. Why? Because you're going to be making a lot of mistakes in here, right? And then also many of you people are focusing on unproven tools which don't guarantee success. Now the tools that you are using, the stock tip, are you making headway for that? Do you do what we do just now? Like what to check the fundamental, all within what we've seen on the trading view, because we have back tested it, we have proven it for the world, and that's why I'm investing together with my client about 60 million in all this. And of course, if you have limited time, right, use the right building trading strategies that we normally share in our 3-day course. So all our masterclass students, we empower them to focus on building their $1 million portfolio. That's what we want to do. All right. You may start off with a smaller amount, maybe like $500,000, 300,000, 200,000, or even if your amount are smaller, less than $10,000, because you have the knowledge, you can able to do it much better. All right. So we'll be doing a master course preview this coming weekend to show you another strategy, again, how to spot market bottom and avoid the market collapse previously that you have. All right, this is a QR code in here, and so make sure you sign up. It's already available on the bottom side of the right hand side there. And of course, going on Monday, we have the Trade VSA showcase. That's right, make sure you join me next coming Monday to Thursday, 9:30 every night, all right, to showcase to you our Trade VSA tools and feature. Day 1 we'll be featuring and understanding market trend. Day 2, growth and FA counters. Number 3, we'll be looking at the US market, how to profit also from falling markets in here. And day 4 is the wealth building framework, which I've shared with you, which how I built this $1 million portfolio for myself and for my client, and something for you to take away. So don't make sure you join me, and that's a QR code, you can join that. So that's all we have here for this evening for our October intake in here. Of course, it will be on the 5, 6 and 7. So make sure you block your calendar, whether you're decided or not decided yet. If you're not decided, just make sure you're available on the 5th, 6th and 7th and 8th of our 3-day course. And also follow on, we have many weekly and monthly Zoom training, personal training between myself and my coaches in here to get you up into speed inside here. And that is a job of all my trainer and my coaches inside there, because we believe that if you focus just on listening, you will forget. But if you participate in the Zoom meeting, you do a lot of the simulation in here, you do the trial, right? And you do the real thing, trading real money, and also following some of my stock portfolio picks for the longer term, for the US market, for the Malaysian market. I tell you, you will make more money than you ever do. All you got to do is know the right thing. And guess what? Our review with our courses has been trusted by 400 of you. We are very close to that in here. Thank you again for your kind feedback. We continue to update ourselves in here, and that's all we have for tonight. And don't forget, if you like what you see tonight, give us a review on our Google Play Store. And for some of you who are interested in our combo setup in here, can register to our number here, 010. So that's not all to it. We will meet more and talk more this coming Saturday for the masterclass course preview in here. Of course, if you have some question that you really want to ask me, just go ahead and pencil those in here. Be happy and more than enough to answer you. Thank you again, and I'll see you this coming Saturday. Bye bye.